What's going on, guys? TK coming back at you, Massive Wealth Builders LLC. And I wanted to give you guys some educational background in terms of um, what a MEC limit is as it applies to cash value life insurance. Because I realize I've done this video before, but I realize that a lot of people just don't grasp and fully comprehend the idea of contribution limits, right? You have contribution limits associated with the IRA, contribution limits associated with your 401k. So the MEC or MEC limit is the same thing as it applies to a cash value policy. It's the maximum amount you can contribute before getting into tax liability, right? So what that means essentially is you pay your bill every month, but you also contribute additional funds when you have it. You go into an app, you push a button, it says add additional funds, and it takes it out your bank account. So the concept when you have an IUL is to max fund it, meaning extra cash, $50 here, $100 there, $1,000 there, just add it. Simple example, buy a policy, get an IUL for a baby when the baby's first born. That grows up with the baby, and so does his cash value account. So instead of giving the baby allowance, just drop $50 every week in his cash value policy so that it compounds at 6 to 8%, which then in the long term gives you more access to cash, because your ability to take a loan out against your policy is solely based on how much you saved. So you want to add additional funds beyond the bill. Set the bill at what you can afford. I did a illustration for a 23-year-old female, 100,000 face value, cash value policy, $70 a month. So pay the $70 a month, but when you get an extra $50, drop it in. When you get an extra $100, drop it in. Keep doing that, because you want to compound the ability to take out a loan, right? That gives you power. So everyone always says, I don't understand how this is going to help me, and I don't get it. When realistically, let's say you save $100,000 in your cash value policy, right? You go into the app, you say, boom, let me take out a loan. Let's say you want to take out $50,000 to buy a car. Guarantee you that, first of all, there's no credit, there's no permission. You just, whatever's available to borrow, you can borrow. So if you take out 50 to buy a car, I guarantee you that the interest rate is going to be lower than what it would be if you went to the bank to finance the same car. So it gives you power. And then when you pay yourself back, you can rinse and repeat. As long as there's money available, you can take out a loan. It's just that simple. And what happens is it's a lower interest rate. You're borrowing from yourself. You're exercised in infinity banking, and you put yourself in a position of power because you don't have to ask permission. It's not based on your credit. So think about that when your child turns 25 and they're ready to get a car. You know what I mean? It gives them more choices, more power, more economic base, more financial security. So why is it you don't get how this is going to help you? Why you don't understand how other communities do it, and they surpass us by leaps and bounds. So the concept is simply giving your children the power to make better, stronger, and not be limited, right? You want to start a business? Borrow it from yourself. And then you're in a better situation, because if you go to a bank and you default on the loan, you know what happens. But if you default on the loan that you borrow from yourself, there's something special that happens, which I will get into on a one-on-one consultation, because I don't want to encourage you to default on a loan. But what I'm telling you is it's not the same situation that happens at the bank. So that's a position of power that could help you, that could change your children's life, because you started when the child was a baby, and they've grown up with the cash and you've constantly added to it. So if you're only paying $76 a month as a 23-year-old female, and you constantly add to it, then that gives that person some additional choices. So I want to encourage you guys to use the tools that are available to you. When you talk about an annuity, when you talk about cash value life insurance, it's a tool that you should learn how to leverage so that it financially benefits you and you get ahead further faster. Everyone always says, I don't understand the benefit. The benefit is having an economic base that you now can list as an asset and leverage against. Don't you know that's on your balance sheet as an asset? When you go to a traditional situation, they consider this as an asset. Your cash value policy and your death benefit are both considered assets. So how do you not understand how that helps you? Why do people argue with me in terms of saying, well, I don't see the benefit? That makes no sense. And my job is to somehow convey the benefit to my community, but my community is the hardest to sell to. You know who dominates the insurance industry? Asians. Because they have a sense of unity and they don't argue about benefits that help them financially to get ahead faster and leverage in a way in which other communities can't leverage. Same thing with the Europeans, the Jewish people. I mean, every community except ours. Even Mexicans have now started to participate and infuse their families with financial foundation that includes the asset of annuities, the asset of cash value policies, the asset of family trusts. So all of these things are non-traditional solutions where you get a benefit. How many people out there understand that there are 4 IRS tax codes that apply to insurance? Basically, as the MEC limit states, you get a benefit for putting your money in a policy associated with insurance. As long as you don't go above this amount of contribution, you continue to receive that tax benefit, which is higher than every other category, every other type of investment. So how do you not understand the benefit? Why do people argue with me in terms of whether or not this is going to help their family and whether or not they should fill out the paperwork? When I found out about this, I was like, it's a no-brainer. And I've already seen other communities do it, use it, cash the check. And then I've seen the effects in my own community for people who don't have it and can't cash the check, have to beg other people to help them with the fact that they have cancer, the fact that part of their health coverage doesn't cover their treatment. All of these things are associated with having a policy. Do you know living benefits cover you while you're alive and gives you a check in case you get sick? So I've seen it in the people who don't have it. I can show you testimonial videos of the other communities who used it, cashed a check, and survived their ailment because of the check. So how does this not help you? Explain to me why this doesn't make sense. Explain to me why you won't fill out the paperwork. It's a empowerment strategy. It's a way to leverage insurance to create wealth. And the community in which I was born into needs it and rejects it the highest. So empower your family, empower your future, learn how to focus on assets, spend less of your earned income and liability lane, set up a family trust, get your household in order. The economy of you is the most important economy, and only you can focus on it. No one can come save you but yourself.